It has been a challenging environment for investors as equity markets have been sluggish for a long time. Uh, every economic data release points to a worsening macro situation. You look at current account deficit, inflation, index of industrial production, rupees crumbling, inflation is rising at a time when growth is slackening, so making it very difficult for RBI to loosen monetary policy. Liquidity is extremely tight in banking system and fiscal position is going out of control. Political situation couldn't have been worse than this, as policy making and execution is at a standstill. Now in this environment, should we just leave hope? Not really. We think that the structural reasons for which everyone was bullish on India are almost intact. Favorable demographics, rising income and consumption levels, low penetration, high savings, opportunities in infrastructure and outsourcing, robust market infrastructure, all these are still intact. Also the froth of boom years is getting cleared. Of course, policy makers have disappointed us big time, but don't forget, democracies have their self-correcting mechanism and we expect incremental action from the government from here on. World over, central banks are pumping in record liquidity to support their economies. Can it fuel a commodity boom? Unlikely, because structural demand destruction in China and other parts of the world should ensure softness in commodity prices. So, a weak rupee, lower commodity prices, falling gold imports all should help correcting current account deficit. And we believe that rupee is reaching bottom and should stabilize at current levels. We think that global investors will look at India more positively, as on a relative basis, economy and corporate sector in India would deliver better than most of the other parts of the world. Our markets always move in line with global risk appetite and liquidity, but this time we strongly believe that we can outperform the rest of the world. Indian investors have been severely underweight equities, and with gold losing its glitter of late and also the boom in real estate seems to be coming to an end. So, because of these reasons, we expect domestic investors to put more money in equity and long bonds going forward. Now, what could be the risk? The risk could be that government policy inaction and deficit spending continues, or the global environment deteriorates to the point of markets freezing, or there is a sharp rally in commodities, particularly food prices. But we expect government to get its act together given the sheer compulsion. We think markets are offering good opportunity to invest in long bonds and equities. Valuations are reasonable, and if history is any guide, these are precisely the time when you get great opportunities to accumulate equities and long bonds, and not when everything looks so rosy the way it was in 2007. We advise investors to maintain the discipline of asset allocation rather than getting swayed by the high volatility that we have been witnessing. We think that patient investors would be suitably rewarded for the risk that they are taking. Thank you.